and welcome to the Trading Bell. My name is Nokip Kimboy, and today our focus is in Safaricom. Question is, what's happening in Safaricom? What measures and moves are they making? This company that we've known for ages, what transitions are they undergoing? We understand they are in Ethiopia. That operation, how is it doing? And what are the avenues of growth in this particular sector that they play in? Well, today my conversation is with Dilip, who's the Chief Financial Officer at Safaricom. Welcome, sir, to this conversation.
Thank you, Noah. Thank you for having me here.
Beautiful. So, looking at the numbers, the focus was when the numbers came out, the drop in profit, yeah? And when it comes to drops in profits, post-COVID, we've seen that phenomena in many companies. I mean, we are in a recovery phase. But for you, it was 22% deep to 52.5 billion shillings. Thinking about that, what was the biggest contributor to this sort of slight drop?
Excellent question. And before I come to the drop in profit and explain the numbers, let me try and explain you what have changed for Safaricom ever since we went into Ethiopia. So we are now consolidating Ethiopia financials. So we need to really understand Kenya numbers and Ethiopia numbers separately. Yeah. So if you have noticed, our Kenya numbers came out very strong despite all the macroeconomic headwinds. On top of that, everything which globally impacted, I think we were not insulated. As a telecom operator and as also a mobile financial services operator, we penetrate pretty much entire Kenya, right? So we are not insulated from the effect of that. But on top of that, we also had regulatory headwinds from reduction in mobile termination rate. That has actually knocked off close to 2 billion of top line. Yeah. So, but despite that, our top line Kenya core performance was very strong. So we reported numbers about 5% service revenue growth year over year. But within that, the first half was slightly muted, but second half came much stronger. So, and if you really adjust the mobile termination rate changes for a like-for-like comparison, our year-over-year growth in Kenya on top line came 5.7%. Yeah, yes. And second half was actually 6.5%. So you see that growth trajectory in the second half was much better, as transition, election uncertainties, before election, during election, after election. So there is a business activities actually came much below expectations. So on top line, I would say we are on course. We are growing revenue top line in Kenya. The other headwinds that came from inflationary challenges, including, if you have noticed, the increase in energy cost. So we are probably the biggest consumer of electricity and the other fuels to run our 6,000 base stations, right? That has knocked off close to $1 billion in our cost. So our cost actually gone up 7%. But I would say in an environment of inflation, which is 8 to 9%, a 7% growth in operating cost was still very good because we have really driven our productivity agenda very strongly. Okay. So with all of that, if you see the Kenya numbers, we actually grew our profit. So profit after tax grew on a reported basis by 3%. Yeah. But if you adjust the MTR impact, so it's a mid single digit growth, which is kind of in line with the top line growth. So I think first I want to explain the Kenya first, which is core. Yes. And we are growing there. Okay. Then comes Ethiopia. And as Ethiopia, we got our license in 2021, around June, and then we started investing. So we are in that investment phase. It's a big country in terms of population coverage that we have to do, and it's a big opportunity for future. And that's where we are focusing on. So Ethiopia, we launched commercial operations in October last year, and so far it's been pretty satisfying. We have recruited 3 million customers. We have invested 1.3 billion so far in that unit, and it is expected that initial days, telecom is not developed in a year or two. It takes time to develop telecom business. Okay. So that's what we are in that startup phase and therefore startup cost in Ethiopia.
All right.
And that drives down. So we consolidate Ethiopia in group financials. That's the change I was referring to. That now, because of that, on a gross profit after tax, on a gross level, it declined at 22%. But that's not the number to look at.
Okay.
The number to look at, because we are 55.7% shareholder of Ethiopia.
Yes.
The rest is owned by minority. So the way to look at profit after tax is you remove the minority interest, because that profit is not attributable to the shareholders of Safaricom group. So you knock that off, then comes the numbers. It's a decline of 10.6%.
Okay.
So I think headline sometimes creates a bit of confusion because
Definitely.
at a group level consolidated. Yeah.
Exactly.
Yeah.
So the initial cost that the company has to pay in regards to breaking into a new market is what we are seeing, and it's not fully 22% as we are seeing it. But looking even as under the assets, because I'm looking at these numbers, especially non-controlling interest. I think is this from a group perspective? Because I saw that has grown from 40.2 billion to 75 billion. And I sort of juxtapose this with the share prices, because I look, if non-controlling interest is growing, there's certainly a particular element of confidence, people buying into the company in a way. Is this largely also driven by Ethiopia, or we are also seeing here in Kenya, because the shares have really been dropping?
So I'll come back to share price a little later, but let me just explain the non-controlling interest part. So I did mention to you about our investment so far, as of March end,
Yes.
last financial year, $1.3 billion US dollar. And non-controlling interest increase is coming from, so this is a consortium level at 100% level, 1.3 billion, which means that the minority contribution of say around 44%, which is not owned by us, is contributed by them. So the increase is purely in Ethiopia, the non-controlling interest. It is the additional investment the minority shareholders are putting in to build the infrastructure there. We are contributing say about 56%, and minority holders with the other consortium partners are contributing 44%. That's how the increase that you see in the non-controlling interest. So it's not in Kenya.
Okay.
Yeah. So now on, you did mention about share price. So I don't want to miss out that opportunity of talking about that. I don't know whether you have any questions around that, any specific questions around that, or
because I mean, I looked at the share price right now, and Safaricom has been on the tongues of many, because it's one of those companies. Especially, I listen to some of my older friends, and that's normally one of their regrets. When the Safaricom IPO came, I wish I would have bought more and hold on to it. But right now, I see now the share price actually has dropped 1.8. It's trading at 13 shillings, previously 13 shillings and 25 cents. And this drop, help us understand what exactly is happening, and is there what will turn that curve?
Yeah. This is something. It's not something which has happened just now. You see that ever since the global macroeconomic crisis started, Ukraine-Russia war, China supply chain disruption due to COVID restriction, you start seeing, and also the shift in the way the interest rate is increasing in US, in other European markets, and high inflationary and macroeconomic challenges in specific to, say, for example, in Kenya. That macroeconomic factors are main reason for share price drop. If you look at our profile of investors, there is quite a bit of investors, almost, yeah. So we are about 25% listed by, publicly. Out of that, almost 1/3 of that investors are foreign institutional investors. It used to be even higher. There has been a consistent pressure on selling from their side. Two things are happening. One is the interest rates are much better in US, in other markets. Second is, because of shilling depreciation, the real return is coming down. If you're investing, and then your shilling has depreciated 15% compared to last year. So if you're investing and then you're getting a return in dollar terms, so actually in dollar terms their return has gone down. So there, and also the shift in what you call that capital flight from emerging market to the developed markets is happening. So it's not necessarily, one is the global phenomena, so there is a readjustment happening, money moving out of emerging markets. Yeah, they're trying to reduce their risk. And second is Kenya. Again, I think the currency concern is huge. And also the foreign investors always look for stability in the currency because they're investing in dollar and they need to get the return back in dollar. Two things they look at, saying that how fast they can get their money back, the basically liquidity,
yes,
and second is the rate. I think in both accounts there has been quite a few challenges.
Okay.
Yeah.
And how does a company sort of prepare itself sort of a soft landing? Yeah, because with the Fed tightening, especially in a market where close to 50, slightly above 50% is foreign investors, then that instability immediately kicks in. Is there moves that can be taken within the market sort of to cushion it, or we just have to be open to play in this global market and also accept the global forces and consequences that come with such moves?
I will divide into two parts. So one is focusing on performance, right? Make sure that Safaricom is a purpose-led company. It truly believes in transforming lives. So make sure that you focus on that, on your strategy, long-term strategy, focusing on your strategy, so that these are ups and downs in economies. You have seen this before, right? But this company has not built in just 1 year. It has been 2 decades, right? So we need to make sure that we are focusing on our execution of strategy, which is very clear. And a part of the strategy is also Ethiopia. So making sure that Ethiopia scales up. Just to give you some numbers, we are about 1,300 base stations. Base stations, which what propels the way you can talk, you're using your mobile phone. Base stations support that, yeah? It's almost like a factory, right? Now, 1,300 base stations as of March end. By next financial year, we'll have about 3,000 base stations. Imagine that is almost half of what we have in Kenya today. We have about 6,000 base stations. So the size of Ethiopia by next financial year is going to be half of Kenya in terms of the coverage. That speaks of the opportunity and the growth side. So we need to make sure that we do. And then we are talking about 10 million customers. Yeah, we just launched October last year. This is a huge opportunity in Ethiopia. So we need to make sure that we execute on Ethiopia strategy very well.
Okay.
And that, of course, propels our top line growth. And year 4, we talked about a break even in Ethiopia. So as you see that, the confidence also comes back, because people now seeing a little bit of a drag. Kenya is strong, doing very well. We all understand that, but Ethiopia is dragging down because of the startup cost. But if they see the scale up happening on the revenue top line as well as in the bottom line, I think the confidence will come back and we stay on course on that.
And I'm looking at the capex for these two markets. I know they are decades apart, but I think at the rate at which Ethiopia is growing, sooner or later we sort of might have a convergence, so that sort of a build up, or even it goes ahead at it. So I was comparing the priority areas for your capital expenditure, looking at Kenya, for example, where you've put 40.4 billion year on year, and we are seeing IT is very critical, investing 28 or 29% of that, and Ethiopia, what is critical is radio access so far right now. Just help us understand how those two elements of capex between the two markets vary.
Yeah. So in Kenya, this is the highest capex investment that we have done ever in the history of Kenya. Last year, 40.4 billion capex that you have seen. And you are absolutely right on IT spend. if you followed our strategy, Safaricom strategy, which is we said that we are kind of a midway into our strategy. By 2025, we want to become a purpose-led technology company. So a purpose-led technology company, if you want to become a technology company, you need to invest in IT. So IT becomes the enabler. Yeah, we have platform plays, which kind of justifies that, the focus on investment in IT. And then we are investing in fiber, a big way, whether it's for business or for consumer. We have started investing in 5G, which is going to take time, but it's going to be another growth engine. We're investing in our enterprise businesses, which is still tiny, but has huge potential to grow. Yeah. So we are investing in Kenya to make sure that the growth opportunities are really the main focus as far as the investment is concerned. Ethiopia, you're right, we invested in Kenya shilling equivalent of 56 billion. And now we are in the build-up phase, right? So we are building infrastructure, we are building fiber, we are building base stations, and the focus will continue. And we did mention about we have a 5-year kind of a peak investment horizon in Ethiopia, and we're going to be investing anything between 1.5 billion to $2 billion as a consortium as a whole. And of course, our 56% will be whatever that amount is. So that's a significant part of the investment that we are going to do. Okay. So we keep focusing on our capex investment. Telecom is very capex intense. You need to keep focusing on it to make sure that the network that you build, so that you can, when you're using the services, you're happy about the services that you're using. So that's the focus. Kenya, we continue to invest in the new growth areas. Ethiopia, we make sure that we scale up and cover the country as quickly as possible. In fact, we've spoken about doubling the network in Ethiopia that what we have in Kenya. And population is also like almost double that of Kenya, right? Ethiopia is about 115 million people. Okay. So that's our 10-year horizon of investment in Ethiopia.
And looking at the rate at which Ethiopia is sort of growing and the numbers, the way you're projecting it, how soon will it sort of have a break-even moment and start making money?
So what we have mentioned about a break-even in year 4, what we call that EBITDA, earning before interest, depreciation and tax, by year 4. And we have spoken about, so roughly Kenya is about 51-52% EBITDA margin. We said that by year 10, we have a steady state EBITDA margin of 40%. Yeah. And these are not necessarily a guidance, but this is kind of an outlook that we educate our investors and analysts. There's one thing that probably, since you've spoken about the size, what are you talking about, see, in 10-year time of Ethiopia? We anticipate Ethiopia to be equal to what Kenya is today in 10 years' time. Yeah, I don't know that you have noticed or not. We just crossed 300 billion top line revenue in Kenya, the first company to cross that milestone. And we are talking about this in 10 years' time, Ethiopia have an opportunity to be at that level. Of course, there's a lot of work to be done in that. So that's the opportunity. Kenya, in terms of mobile financial services, there is still a long runway for us to grow. We have been growing double digit in M-Pesa. We've seen that now is contributing to 40% of our service revenue, which is a strong momentum. Mobile data is still a very early stage, growing double digit. Fixed, we are investing a lot. We are growing over 20%. So there are quite a few growth engines that are going to propel that. And that will justify our investment that we are making both in Kenya as well as in Ethiopia.
And even as looking at the financial services part of it, the overdraft services, very popular, the Fuliza amongst the people, and as part of diversification and growth strategy, now you provided this to businesses. Yeah. And a lot of uptake, the sort of hunger for credit in this market. Is that an area also that you intend to double down, and is it a model that can be replicated in the Ethiopian market?
Very good question. Maybe I start with Ethiopia. So you have noticed that we now have the license, mobile financial services license, to roll out M-Pesa in Ethiopia. Mm-hmm. That actually got only on the day of our earnings release on 11th of May. A long wait, but we're happy. So what it allows us to roll out pretty much everything that we have in Kenya. As you know, Kenya is really the model market as far as mobile financial services is concerned. And we have M-Pesa Africa, which is a JV between Vodacom and us, which allows us to now make sure that products and those launches are standardized and can be launched very quickly. So that's what we are doing. So we are very hopeful. In fact, we went public to say that by Q2 of this financial year, we should be launching in Ethiopia our mobile financial services. Now, do we launch overdraft products from day one? Maybe not, but we start with something, basic products, and then we kind of scale up. But we don't need to wait for the way we waited for Kenya, like it took 15 years to get into some of the services that we are launching, including, as you rightly mentioned, the overdraft for business. Mm-hmm. We have everything ready, and the team is, from Kenya, they are parked there to make sure that we can launch it very quickly.
Okay, that's great prospects. Now, as we finish this discussion, I know you've mentioned the strategy for the company, fully going into transforming into a technology company, and I'm looking at that. There are the new avenues of growth. Talk about the Internet of Things. The world is really changing right now. We're talking even cryptocurrency. We're talking the world opening up. So in the financial services, remittances, cross global money transactions. From where you sit, which one holds the greatest potential in terms of the future and the area that you think that is sort of a golden goose in the near future? What will that be?
Okay, I won't go into a golden goose conversation because that's not fair.
Yeah.
But I think some of the areas are quite exciting. You did mention about IoT, Internet of Things. That has been one of our key focus area. If you have noticed our earnings release presentation, so we give reference of some of these new areas, ICT, cybersecurity, cloud services, Internet of Things. We have 1.5 million connections on Internet of Things as the end of March last financial year. Now, moving from a vanilla connection more into solution is what we are going. For example, water meter, electricity meter, vehicle solutions, vehicle tracking. We are present, but we are now upgrading, and these revenue lines are growing 50%. Content is a big play. Mm-hmm. Yeah, the people are content hungry here. So we are doing exceptionally well in that space. That revenue line is growing 50%. So there's quite a few areas in this, and the enterprise. Mm-hmm. So from just a connectivity to a solution, so you have seen that some of the areas like we are partnering. We just did in financial services like Hustler Fund. We are the one who provided the platform. We are participating in the fertilizer subsidy. There are quite a few things which are coming up. For example, digitization agenda of the government, where the services, the public services, how can we digitize? We are working with the counties, many counties now, supporting them. But it's all our technology which is enabling those solutions for the general public. Okay. So that's what I'm very excited about, that if you truly stay tuned to your purpose of transforming lives through technology, then you can really become a purpose-led technology company.
Oh, beautiful. I think heavy lessons right there, Mr. Dilip. It can apply to personal lives. If you remain focused on your purpose, you can have greater impact rather than just hitting left, right, and center. I think this has been a good conversation. We've barely scratched the surface, but at least we've touched on the most important thing. Thank you very much, sir.
Thank you so much. Thank you so much for having me here.
Beautiful. Dilip Pal, CFO, Safaricom, saying the prospects are unimaginable, but technology is here to stay. And the sooner we familiarize ourselves with these new platforms, Internet of Things, be curious. Safaricom is curious, and I think it's a challenge that we can take also personally in our own lives and sort of pivot into the tech world. What can we contribute in that regard? But that's the latest from the world of Safaricom and the potential, not only in Kenya, but also in the Ethiopian market. I live with the markets. My name is Nairobi Securities Exchange.